Candle Range Theory Trader back with you with another video, just explaining the key price levels, the most important price levels that you want to frame your candle range theory off of. So let's not waste time and get right into it. When it comes to the candle range theory, it's easy enough to recognize. The main thing that we have to figure out after we know what the pattern is, and these are just two examples that I trade, the first candle here and the second candle here that pokes above this high, closes below it, and the traditional three candle pattern, candle one, candle two that raids it, and then candle three, which closes down below. These are bearish examples. For bullish examples, obviously you just flip this stuff upside down. But there are 5 key price levels that I want to illustrate to you that will help you filter out bad candle range theory trades and just really narrow your focus. Okay, so there's only 5. I'm going to illustrate them for you, and then we're going to see if we can find a couple of them throughout this past trading week. Okay, so the first one, which is CD, that stands for, and I'm going to type it here, the current day. Okay, current day. In other words, you want to see price make a current high of day. And I like trading the 4-hour chart, but really you can use, I'm not going to say any time frame, but let's just say for the sake of this example, use a 4-hour chart, at least for these candles. And we'll get into the nuance a little later. So current day high, you're going to see something like the 5 a.m. 4-hour candle make this first high of day. And then you'll see the 9 a.m. candle make the new high of day, poke above it. And then when it closes below it on a smaller time frame, it tanks and then goes to the other side. For the 3 candle pattern, you're going to see the first high of day, we'll say at 1 a.m. and then 5 a.m. Eastern Standard Time, it makes a new high of day here and then closes below it. So that's 1 a.m., 5 a.m., and then at 9 a.m., price will tank. Sometimes you'll also see the 5 a.m. make this one high, and then the 9 a.m. make a new high, and then the rest of the USA session starting at 1 p.m. start to tank. But can this happen at different times, like during Asia? Yes, it can. But I don't trade Asia. I just try to stick to London and US. Okay, so that's current day. All right. That's the key price level. Now, obviously, the current low of day would be the same thing in reverse. But I'm just sticking on this to, like I said, make it shorter. And I'm going to show you this on the real chart. So just bear with me. Now, the next one that we can use to frame our price level is the prior day. Okay, prior day high or low. Okay, and again, so what you're going to be looking for at this example, and this is an example where you may be able to drop down to a lower time frame and look to see if price will once again break. Looks like it's going to poke the prior day high, maybe poke it again, little M pattern above it, and then tank in 2 legs. This is just a basic double top or M pattern, leg 1, leg 2. Close below it, try to get some momentum. You may not even get this second candle if price pokes above it and then closes to go straight down. You may see something like that, whereby you'll see, like, say, if this is let's say, for example, this is a daily. Let's pretend these are daily candles. This could be like Monday, right? That could be Monday's high like that. And then Tuesday will do something like it'll open, go up above Monday's high, and then close down here. All right. That's using the prior day high or low to do that. And then same for this level over here, whereby you may see something like, Tuesday do something like, or let's say a 4-hour chart like that. You'll see price poke the prior day high, poke it again, close below it, and then close down. Say something like on a 4-hour, or it could even be a 1-hour, the 1-hour chart. The time frame doesn't so much matter in this case. The main thing that matters is going to be the price action. This could even take place on a 15-minute chart, but listen very carefully when I say this, okay? If you see, this is just basically an evening star, all right? 1, 2, 3, the evening star pattern. 15-minute candle may poke above the high, another one right here, and then the next 15-minute candle may tank, and then it'll continue to drop. But this would be the entry that you would look for on a 15-minute chart using, again, the prior day high as a range. So on this one, I'm just acting like this is already dropped down on a lower time frame. It's just that you're using the prior day high as the key price level. Okay, that's what I'm focusing on, your key price levels. This also could be, not to confuse you too much, but we'll go back over here one more time. Let's say this is a 1-hour chart where price may poke it at like 10, and then it comes back at like 11, and 11 o'clock may make a make poke above it again, and then close all the way down here. You don't know. So, but that's just using the prior day. I want you to focus on these price levels though. Now, the next one can be the current week. Okay, just like we did the current day, okay, high or low, you can also use the current week high or low, whereby price would make a new one high of the week and then another high of the week here. Let's just say this is a 4-hour candle. So to say at 9 a.m. it makes the high of the week, and then at 1 p.m. it makes the new high of the week here, and then just tanks. All right, that's an option. Or for the sake of example over here, let's say we go over here with it. And let's just say 1 a.m. makes the high of the week, and then 5 a.m. makes the new high of the week, and then 9 a.m. tanks price, okay, for the 3 candle pattern. But we're going to use the price level of the current week, and I'm going to show you the mark levels indicator that's going to show all this for you. All right. Now, the next example that we can use for number 4 is going to be the prior week high or low. Okay. So same basic example here, whereby you're going to be looking if price is near the prior week high or low. You can use the smaller time frames to possibly look for a reversal. So let's just say, for the sake of this example, this is a 1-hour chart. Okay, so you're looking at price and it's at the prior week. Let's say this is like 9 o'clock, and then the 10 o'clock candle, it opens, pokes above the prior week high, and then starts the momentum going down. You're still looking for the same behavior, but if you're using prior week levels, you may be able to drop down to a lower time frame to get this behavior or see this price action. It could even be a 15-minute chart. Again, you don't know. I wouldn't recommend 1 minute though. Okay, I just wouldn't. But I'd say, like, say 15-minute, possibly even 1 hour. Let's say if your price is at the prior week high or low, and price goes, let's say here at, let's say 8 o'clock, 9 o'clock makes the poke above the prior week high, closes inside of it, and then the very next hour it starts to tank. So when you're using prior week high and prior week low, you can already just default to lower time frames because the price level has already been situated. But when you're using current week high or low, then you're going to use higher time frames. That's going to help you really solidify the entry on the lower time frame. I hope that makes sense. If it doesn't, rewind the video, see the examples that I'm going to show, and it'll make sense to you. The last one, which I'm not going to cover too much in detail, is going to be the prior month high or low. I'm not going to say current month high or low just because you can, but I'm just not going to make this video 2 hours long. But let's just go ahead and type that out. Now, for the prior month high or low, I recommend nothing lower than the 1 hour time frame to see this type of price action. Because it's a monthly time frame, price can take longer to play out, even a daily if you want. So let's just say, for the sake of this example, let's just say this is what is it, September. So let's just say this is August high right here, and let's just say this is Monday, and then this is Tuesday right here, and Tuesday closes right here. So Wednesday I'll be looking to take a short. But if these were daily candles, 1, 2, 3, so that's a 3 candlestick pattern, 1, 2, 3. And once I see price on the daily go up and then close inside of it, I would have more peace about taking this down to the downside because it could not break the prior month high. So I hope that makes sense. Again, I would not use like a 1 minute chart to take entries based on the prior month high or low. That to me just doesn't make sense. The higher the time frame, I believe that you need to have a lower time frame that's a little bit higher than what you would normally trade if you're dealing with big time frame levels. Okay, so current day, yeah, possibly maybe be able to get away with a 1 minute or 5 minute chart, but not for the monthly. I just wouldn't recommend that. Okay, so I gave you those levels. Now let's see if we can find some in real time on this chart. So I'm going to get rid of this, and let's take a look at a different pair. And I'm going to show you how to set up the mark levels indicator so that you can spot these in real time. So we'll start first with a current day. And I think, matter of fact, I think I already know of one. So let's just go to $CAD because I believe I already had that isolated, just to make sure this video is not too long. Okay, so what you would do is you would go to indicators right there. I already have it saved to my favorites, but you could do mark levels by mark tools. And let's just say, okay, I've seen all the options. I only want to trade the current day, high or low. Okay, fine. So here's what you'll do. You go to mark levels. I like to darken it up some because it does start with a light gray. So I just darken it up, change the opacity to 100. And then under settings as well, you would just uncheck everything except for what you want to see. So if you only want to see the day, check that. Okay. And then you just click current. Be sure to click current and hit OK. And there you go. So there's your current high of day right there. Hold on. Let me get rid of these other levels real quick. We don't even need previous. There you go. All right. So there we go. All right. So all you really need, I mean, you don't need the daily open, but it's there. All right. So again, remember our pattern though. This is just so we're going to take a look at the day. All right. I'm going to leave the daily open just so we see where price opened at. So we have that 3 candle. So we're only trading off the high of the day, right? So this was the high of the day at 1. New high of the day made at 5. And then at 9, okay, 4-hour chart, straight drop. There's your candle range right there based on the high of the day. Current high of the day, not the prior. All right? That's that. Now, what's our next example? Let me see here, because I don't want to leave any out. It is... I hope I didn't delete it, but maybe I did. Okay, I did. Okay, prior day. Okay, so let's take a look at prior day. I'm going to move this over so I know that's my reference. So what would I do now? I'll go to mark levels. And okay, I'm only trading off previous day. So I'm going to get rid of current and do previous. Okay. I'm going to hit OK. And I'm going to see now what pairs played off the prior day high or low. Let me get rid of these 2 lines to avoid confusion. Okay. And if we have to go back in time a little bit, we can. I'm only going to stick with what played out during this week. Okay, don't see any there. Let me go to all the pairs and see if we have any that swept above. Okay, bingo. Here's one right here. And they pop up at you like you wouldn't believe. It's right there for you. Bang. Hiding in plain sight. Prior day high. Right here. Okay, so what we're going to do now is drop to a lower time frame. We'll do 15-minute. Let me see here. I don't know where that came from. Okay, so we're going to reset the value, and there's our entry right there. This is on the 15-minute chart. So see how price pinned the prior day high and then closed back inside of it. So entry would have been at 9 o'clock a.m. And so there's our entry right here. Stop loss can go above that candle. Yeah, let's see if we could at least got a 1. Yeah, that would have been good for a 1 to 2, a little over 1 to 2 either way. Okay, so right there, didn't move too much, but if you just want to make that your specialty, you can just focusing on prior day highs and prior day lows. And this is the only price action you're looking for. Price goes above and then closes inside of it. And this is really a multi-session M as well. I mean, we're not reinventing the wheel here. That's leg 1 on Thursday, leg 2 on Friday. So same type deal. Okay, but that's that. So let's see. We'll go back to Euro New Zealand for our next one. So our next one is going to be the current week. So how do we frame that? Let's go to a new pair. I'm just going to go to CAD Yen just for the heck of it. And then what you do is you go to your mark levels. You click week. You don't even need the day. And I'll check all of that. Current. I'm going to leave the daily open there. And the weekly open. Okay, so now we're just focusing on the current high or low of the week. And let's see what we can find here. Okay, so here's one. Let me see, this is daily. So here's one right here. This is a little bit of an extreme example, but right there you see the low of the week and then a new low of the week. I'm going to see if I can find one that's a little tighter. This is a bullish example, but let me do a quick search to see if I can find something a little bit better. Let me get rid of that. Not that one. Okay, this one might be good for a short. Right there. Okay. You know what? Let's just go with this one. All right. So remember, we're doing current high of week. All right. So I'm going to go down to a 15-minute, but let me explain this real quick. Here's what we're looking at. So this is Monday, Tuesday. This large candle here's Tuesday, Wednesday, Thursday, Friday. All right. So Tuesday made the initial high of the week, and then Wednesday went above it, and then momentum started closing down beneath it, and then you just ride it down to the downside. So this is good enough. Let's take a look at our possible entry. So I'm going to go down to a 15-minute chart and see where our entry would have been on Wednesday. And it didn't close inside of it until 2:30. This was the Fed decision as well. So, but the Fed decision came out at 2 p.m. Eastern Standard Time on Wednesday. But this one, based on the current high of the week, would have been good for an entry there as it went above and then closed below. Sizable stop loss. Well, let's see if we could have got at least 1 to 2. We could have 33 pip stop loss. If you had a 70 pip take profit, and that would have worked out for you. It did keep dropping as well for the rest of the week, as you can see. However, there's no way to predict how far price is going to go. There's just, if it were possible, everybody be rich, so just try to get, I'd say at least 1 to 2 is a realistic expectation. But that did work out. But that again is based on the current high of week. You're just trading off of the high of the week. That's where your range is based. Okay. So that's that one. We'll get rid of that. Let's go back to Euro New Zealand and see what our next to last one is. Let's see here. I want to say it was the prior week, but let's see. Yep, prior week. So I'm going to go to mark levels. Go to my settings, and if I only want to trade on prior week, I'm just going to click prior week. I don't need the current one. Let me see. The style's still the same. Okay. All right. So I hit OK, and I know the next one's going to be prior month, so I'm not worried about that. Okay, and then you'll see the initials PWH. That stands for prior week high or prior week low. So obviously you have to be careful at these levels because price is not guaranteed to reverse off these levels. As you can see, anybody who tried to go short at this prior week high got destroyed. Okay, price kept right on going. You're going to want to find something where it acted as resistance to put it, bluntly. So let's see what we got. Do we got one right here? This one, okay. This one was close, but see, anybody who went long right here would have got stopped out. Unless they just didn't have a stop loss and had the margin to accommodate it. I like for the price action to be a little bit cleaner than this. This is hold on, let me do this. That's the low. Okay, but we see here PW prior week low right there. Okay, so see, I went below it and then closed inside of it. This is a daily chart. So I mean, if you would have took Thursday up based on what Wednesday did, that's fine. But I'll tell you what, let's drop down to a 4-hour and see what we can see on that. And there wasn't even, this is the 4-hour. It closed all the way up here. It didn't even give much of a retrace. So I'm going to find something that may have been a little cleaner. So let's go back to the daily and see what we can see real quick. That one came within a hair. Look at that one. See that? But that's ideally what you're looking for right there. It's just I doubt, I don't know how good of an entry you would have gotten on that because of the size of that wick. However, I mean that's textbook right there. Pinned the low of the prior week and then just went all the way up back to the prior week high off the prior week low. That's excellent. Let's see, what else do we got? Nothing there. And again, see, anybody who tried to go long here got destroyed because the price broke down out of the prior week low. So nothing good there. Okay, we got something here. This is Monday, Tuesday. Okay, let's do this one. This will work. Now, the key is though, take your profit while you can get it because price did come back up, but this is good enough for a decent example. So let's zoom in on this. Okay, so Monday gave a poke above and then closed inside the prior week high. Tuesday did break up back up above it a little bit, but then it still did tank. So let's see what we could have did on that. Let's go down to a 15-minute chart. And sometimes you just have to stick with the pair too in case it does decide to break back outside of the range. But going back to Tuesday, best entry would have been, okay, here's Tuesday here. Price went back inside the range at 9:45 a.m. USA session, Eastern Standard Time. Right there. So that could have been a 1 to 5 if you had a 10 pip stop loss, if you were banking on the fact that price wasn't going to come back outside the range. So you see here a lot of consolidation, but that's what you're looking for. Your trading range is always going to be around the range high. Best you can do, best you can help it at those key times. But that's why I say get your profit while you can, because price did come all the way back up. Okay. So that's framing it off of the prior week high. Same thing for prior week low in reverse. Okay. So the last thing is just going to be prior month high. So what I'll do is I'll show you a real trade that I took. I got a little bit of profit on it, but it didn't drop as much as I thought it would on New Zealand, Euro New Zealand. So again, how do you set that up? All you do is go to mark levels. I would not recommend trying to look for daily trades based on monthly levels because they're just not, it's not going to happen. You can uncheck these equal highs and lows as well. You don't need that. So all you do is go to month. You don't need day, don't need week, and go to current. I'm sorry, not current, previous. There you go. So this will mark the previous month's highs and lows. And also, I'm sorry, get the swept one in there too. That way, even if it's swept, that doesn't matter. And then this line right here, let me go to a bigger time frame. PMH stands for prior month high. And I'll be looking to take a short when price closes back inside the range. See, that's the high right there. Okay. But see how it closed inside of it? It faked me out. Closed inside, went down, came up, went down, came up. As you can see right now, it's still trading above the prior month high. So not ideal for entering right now. I'm flat right now, but I did get a little bit. I took a couple losses and like small profit on this one. As you see, it's mainly just consolidating at this level, as price can do often. Again, I wouldn't recommend day trading this often. This could be a decent M pattern with dropping a lot of longs up here, but it could just as easily break out because as you can see right now, it's still closing above the prior month high. So I don't know where it's going to go. So, but at the same time, that is a level that you can trade off of. Can you do current month as well? You can, but I just didn't feel like covering that in this video. But those are the key price levels that you're going to want to trade off of. So remember, it's not just enough to know the candle range theory pattern. You have to frame it correctly. And the best way to frame it is off of daily highs and lows, prior day highs and lows, weekly higher lows, prior week high and lows, or prior month higher lows. Okay, those are the price levels that you're going to want to watch. So that's it. That's everything. Those are the prices that you need to look for. I wouldn't recommend trying to trade all of them either. I recommend specializing in just one. So if you just want to do prior day highs and lows, you can make a decent living just specializing in that. And I already showed you how to set that up on the Mark Levels tool. If you don't remember how to do that, just rewind the video and all the settings will be right there. And just click what you want to see. You're going to click day. Let me see. Say, for instance, you just want to specialize in the day, even though I've already showed you. I'll show you this one more time. Just know what you want to specialize in, and that's all you're going to check. If ever you're not sure, like I said, just refer to this video and be sure to leave swept checked. And if you want to do the prior day high or low, you do that one. But if you want to do current day high or low, click that one. I wouldn't recommend clicking both, unless you just really, can have that much attention to detail. But I would specialize in one over the other. I prefer current higher day, but you do what you like. But that's the whole video. I appreciate your time and attention, and I hope you have a great rest of your day. Take care.